Welcome to the Expert Property Shop and our weekly property market update. Today we are looking at the latest mortgage rates. Current UK mortgage rates have eased compared with a year ago, according to Rightmove's latest data, which tracks around 95% of the mortgage market. The average two-year fixed mortgage rate is now just over 4.2%, while the average five-year fixed rate sits slightly higher at around 4.3%. Both of these are notably lower than where they were this time last year, offering some relief to buyers and homeowners after a prolonged period of higher borrowing costs. Mortgage rates still vary significantly, depending on deposit size or loan-to-value. For buyers with a 5% deposit or 95% loan-to-value, average 2- and 5-year fixed rates are close to 5%, and these rates have remained fairly stable week to week. At 90% loan-to-value, average rates are slightly lower, sitting in the mid-4% range for both 2- and 5-year fixed deals, with small weekly reductions recently. Borrowers with larger deposits continue to benefit from more competitive pricing. At 85% loan-to-value, average fixed rates are just over 4.2%. At 75% loan-to-value, rates fall closer to 4.1%. And for those with a 40% deposit or 60% loan-to-value, average rates drop below 4%, particularly on 2-year fixed deals. The trend highlights how strongly mortgage pricing still rewards lower risk borrowing, with the best deals reserved for those who can put down larger deposits or who have built up more equity. From an affordability perspective, these lower rates compared to last year may help some buyers re-enter the market, especially first-time buyers who had been priced out when rates were closer to 6%. However, borrowing costs remain higher than the ultra-low levels seen earlier in the decade, meaning careful budgeting is still essential. Rightmove also points out that mortgage rates continue to be influenced by expectations around the Bank of England base rate. While the base rate has been held steady recently, markets are watching closely for potential cuts later in the year. Any changes there could filter through to mortgage pricing, although lenders tend to move cautiously. For homeowners coming to the end of a fixed deal, current remortgage rates are also more competitive than a year ago, particularly for those with strong equity positions. This makes it an important moment for borrowers to review their options, rather than automatically moving onto a lender's standard variable rate.